Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news markets are waiting for officials to make up their minds. In Australia, it is Hayne. In the US, it is trade with China. Yesterday, the US Fed actually made a nothing decision, but it has had a huge impact all the same. Bond yields have fallen as investors prepare for a downturn, and the New Zealand dollar has risen as the greenback has been sold off. But equity markets quite like the do-nothing signal. The number of Americans filing applications for unemployment benefits surged to nearly a 1.5-year high last week, but analysts dismissed the jump as a one-off and said temporary factors, including the partial government shutdown, were to blame. Data is starting to be released after the shutdown in the US. Today, November new home sales data showed a solid jump from October, but to levels that are 7.7% lower than the same month in 2017. And a key regional Midwest PMI has tanked in January, down to its lowest level since 2017. In Europe, the EU has said it will charge 8 unnamed banks with operating a cartel in trading Eurozone government bonds between 2007 and 2012, years when the financial crisis dragged down banks and countries. And the EU, including Germany, France and Britain, have set up a special payment platform to keep the Iran trade intact despite Washington's sanctions. That's unlikely to go down well in Washington. The EU has also said GDP growth in the area was sharply lower, but still positive in the fourth quarter of 2018. In China, next week it is Spring Festival, a week of public holidays, and a mass migration back to family villages. But those working in factories may not be feeling so happy. The official factory PMI contracted in January, the second straight month of decline. Those in the service sector will be feeling a little better, however. According to that measure, the expansion is solid and improving. In Australia, all eyes are on the weekend release of the Hayne report. This is important to them, as new analysis shows that the major banks are rejecting up to half of all home loan applications amid uncertainty around the new rules expected for the financial sector. US Treasury 10-year yield is 9 basis points lower today to be just on 2.64%. Their 210 curve, however, is just on 16 basis points. Gold is up another $10 an ounce to $1,320 an ounce, and that is an 8-month high. And US oil prices have risen again today, up to just on $55 a barrel, while the Brent benchmark is just on $62 a barrel. And the Kiwi dollar starts today much higher at 69.2 US cents, a gain of nearly 1 cent. On the cross rates, we're a little firmer too at 95.1 Aussie cents and stronger at 60.4 euro cents. That was the TWI up to 73.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.